We got some great news from Nvidia when the company reported its quarterly financial results and held a conference call with Wall Street analysts. Nearly every important factor that investors were looking for came in better than expected, and I'm going to share some of those details with you here in this video.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, the company's management team elaborated on a fact that I've been talking about all year long in 2025, and more so after recent earnings reports from large hyperscalers. Nvidia highlights that analyst expectations for the top cloud service providers and hyperscalers in 2026 aggregate CapEx have continued to increase and now sit around roughly 600 billion. That's more than $200 billion higher than what we thought they were going to be to begin 2025. And remember, starting 2025, everyone was amazed at the amount of increase in capital expenditures from these companies. So already coming into the year, investors were enthusiastic about the huge spending that's coming online from these large hyperscalers. And fast forward towards the end of the year, it looks like the spending is going to be roughly 50% more than what we imagined in the beginning of the year. So it was already robust at around 400 billion, but it now looks like it's going to be closer to 600 billion, which is 50% more than we initially expected. And a lot of that came in the most recently completed quarter from the earnings of Amazon, Microsoft, Alphabet, Meta, which all stated that they will be spending tens of billions, if not more, on increases in CapEx compared to what they told us just 3 months prior. So they're seeing such good return on investment that they are accelerating their investments in this category more so than they already were in 2025. Furthermore, they also told investors that in 2027 and 2026, it's likely to continue. Like they're going to continue spending even more than they're spending right now. And that's great news for Nvidia stock investors because a lot of that money is going to purchase GPUs that go inside these data centers optimized for AI. The question mark remains for these large hyperscalers, the companies I mentioned earlier, if they can monetize these investments enough so to offset this large investment, will they generate a sufficient return on invested capital to justify all of these hundreds of billions of dollars in investment? That's the question mark. My opinion has been that it's very likely they will. These are smart management teams, prudent management teams that have evaluated this opportunity and determined that it's extremely worthwhile. And the evidence I'm seeing with management teams continuing to come back to investors and tell them that they're going to spend even more and even more and even more tells me that what they're seeing is actually getting better. So what they saw early in 2025 improved so much so that they increased the spending. You're not going to do that if the early results indicate that it's not working well, right? If your early results are not working well, you're not going to continue doing that because it doesn't make sense for your business. The unit economics of that investment just doesn't make sense. But they're doing the opposite. They're increasing that spending. And so I think investors are right to be concerned about the growing risk of these spending, but at the same time, you have to evaluate the management teams of the companies that are making these investments. Look at their history, right? I shared with you the history of those companies, Meta, Alphabet, Microsoft, and Amazon, the history of the returns on invested capital they've generated. And all of them, all of those that I mentioned, have generated strong and improving returns on invested capital. So these are very capable management teams that know how to operate their business, and it's increasingly difficult to do so when you're operating a business at this large scale, when you're investing and allocating capital in the tens of, if not hundreds of billions of dollars. But they've proven to be effective. And so when you're dealing with a management team or several management teams that have been proven effective, I think it's reasonable to give them a longer leeway or more rope to make these investments, which is the opinion I've had about these capital expenditure investments from these companies. But that's only half of what Nvidia sees as their long-term opportunity. Another growth pillar is the ongoing increase in compute spend driven by foundation model builders such as Anthropic, Mistral, and OpenAI. And they've made huge deals with OpenAI and Anthropic recently to expand their computing capabilities in order to support their business, which is increasing significantly. In fact, OpenAI recently shared that their weekly user base has grown to 800 million weekly users, 800 million. Enterprise customers have increased to 1 million, and that their gross profit margins are healthy. Enterprise customers are important for OpenAI because these are paying customers, and these are the customers that are helping the business generate revenue. The bulk of the 800 million are free users. And at some point, OpenAI will begin to monetize those weekly active users, either with advertising or by charging a monthly fee for using the service and increasing the restrictions. Right now, they let you use ChatGPT for the bulk of your needs without needing to pay for it. But eventually, I suspect they will become more and more restrictive and allow you to have, instead of right now, if they allow you to conduct 100 searches for free or 100 queries for free, they might reduce that to 50 and then 25 and then 10. And then as users bump up against that restriction and they start to see that, hey, we need to use it more and we don't have the capability because we're not paying for it, they will convert to paying members at a larger percentage as OpenAI restricts and monetizes more aggressively. Anthropic has been more focused on profitability and less focused on growing the number of weekly active users. It's more focused on business users and paying users. Anthropic already reported that its annualized run rate revenue has reached 7 billion as of last month, and that's up from 1 billion to start the year. That's a 7x increase in revenue at the billion-dollar scale for Anthropic, which is now becoming one of Nvidia's customers given their recent arrangement with Nvidia. So you're seeing the end demand for large language model and for artificial intelligence continue to boom, and that's great news for Nvidia and Nvidia stock investors. Hey, thanks for watching. I truly respect every viewer who takes the time to seek qualified financial analysis. Unfortunately, there are a lot of unqualified voices online giving unsubstantiated stock advice. My goal is to provide research that's grounded in data and professional training, not just what's popular. For those new here, I hold a master's degree in financial economics. I'm a CFA charter holder, an author, an adjunct professor of finance and economics. I've spent nearly a decade researching stocks professionally, and I'm here to help you make informed investing decisions. If you found value in this analysis, make sure to subscribe and consider joining the channel as a member for early access and in-depth members-only content.